Welcome, everybody. Welcome. This is the start of the future. This is the start of something great. This is what 2023 is going to be all about. This is where everything starts. This is the beginning of something terrific. I hope you guys are all excited, because I know I'm excited as hell to go ahead and show y'all what Bossing Up has been cooking up, what Bossing Up has been all about, and where Bossing Up is going with our future. We are on a tight curriculum, so throughout this all, I ask that you guys stick with it, stay focused. Again, this webinar is going to be recorded. I don't want to spend too much time kind of spooling and going over the same details, so allow me to kind of dive headfirst and dive into it. Anything that's missed, like I said, is recorded, so on and so forth. So this webinar, what is this webinar about? This is the best way to start 2023 as far as for psychology, when we talk about greed, when we talk about fear, when we talk about lack of confidence, when we talk about inconsistency, which is a big one, when we talk about not being patient, and when we talk about like finding our high probability setups. These are things that all affect us in the market. And we got to be able to kind of put our foot down and be able to kind of take control, but also mold the trading environment for ourselves. So I kind of want to go over what we're going to be kind of, again, sharing some light on, because everything I just talked about was the 80%, was the psychology. We're also going to go ahead and be talking about some technicalities. But when I say talk about technicalities, I'm talking about more so risk management. I'm talking about more so back testing. I'm talking about more so a trading plan. I'm talking of ways on how you can even sharpen your skill set even further outside of the regime of the trading environment. So we're going to talk about psychology. We're going to talk about the technicalities, which is the 20%. We're also going to be going over a project that I'm working on towards the end of the webinar. We're going to be going over a project that I'm working on, and that's going to set the tone in the future for the Boston community. Now, this project that I'm going to go over towards the end of the webinar, it's exclusive only for you guys. No one else is going to go ahead and be able to kind of gain access to it. No one else is kind of going to be able to kind of see or understand what's exactly going to go ahead and go on in the future. So before I actually begin, this next hour that I'm about to go into, there's no questions that are allowed to be asked. I want to make sure I drop nothing but gems. So it's going to be strictly 45 minutes of uninterrupted value. I want to talk about just, again, some psychology points in the market, also some backtesting points, so that way we can do good. Everybody that's here, I want you to drop in the chat where you're from. In the chat, just drop where you're from. Fire. Okay, we got Toronto, we got Ohio, we got Chicago. Wow. This is beautiful. A lot of people in the building. This is beautiful. Now, keep in mind, right? We got everybody from all over. We got Miami, we got Amsterdam, we got Kenya, we got Jersey. We got all over. Again, towards the end, I would like your guys' feedback on the session before y'all guys get off. I would like your feedback on the project that I'm also working on. And I'd like your feedback on how you thought this webinar was. So that way in the future, when we do these things even more, we can be even better. Cool? That guys can stop. So again, the 45 minutes is going to go ahead and start now. Save your questions. You guys will have time to go ahead and ask your questions towards the end, and so on and so forth. So just keep that in mind. All righty, cool. Let me go ahead and move this over. Can everybody see my charts okay? Can you drop in the chat if I can see my charts okay? Just drop a one if y'all can see everything okay, everything's fine. All right. So the very first thing when it comes to GJ, US 30, gold, NAS, whatever pair it is, when it comes to any pair whatsoever, whenever a pair is dropping, and when I say dropping, whenever a pair is flowing frequently in one direction of trend and not retesting, it is solely manipulated by news. Again, I repeat that again. When a pair is dropping in one direction and it's not doing any retests, keep in mind, I'm on a higher time frame right now, but I can drop down lower. Whenever a pair is just dropping and it's not doing any retests, any movement, it's not committing back to any side whatsoever, that is being manipulated by news. So the easiest way to see this, obviously, is to go to the lower time frames, because it's the lower time frames that usually get its retest, and you can see it'll just go off in straight one direction. Right then and there, from the 1 hour and below, you can be able to identify if a pair is being manipulated by news. Everything from the 1 hour and below should be doing some type of tight retest to where you're seeing something of the such of a pullback, a continuation, a pullback, a continuation, a pullback, and continuation. This is ideally what you should see from the 1 hour to the 1 minute to see if news is in control in the environment. I want to start off by that just because it was a very newsy week. It was bad for GJ because it dropped, good for gold, good for US 30, good for NAS, good for all the upper pairs. But again, I want to give y'all guys tips and insights on how y'all guys can spot these things. And again, use it to your advantage to become even better, right? Now, greed. I see when I get a lot of DMs from you guys when it comes from greed. Greed is something that it looks like continuously gets in your way. My relationship, I want to say, when it comes with greed, when it comes to this trading in general, I have a trading plan. And my trading plan, I try to stick to it the best of my ability. But when it comes to greed, ladies and gentlemen, the best way to focus, the best way to break greed whatsoever, ladies and gentlemen, is to focus on consistency. The money will come. Focus on being consistent. Like, I see like a lot of people, like, they try to go for these 80, 90, 100 pip moves. Like, don't get me wrong, it's super realistic, but it's only realistic to a certain point, right? Because not every market condition is going to give you that same volatility. Not every pair is going to give you that same day-to-day movement. I know US 30. I personally tried to day trade US 30, and sometimes US 30 will be in the middle of a move for a whole day and give a push the next day. Sometimes gold will be ranging and consolidating like how it was here before it gives us that push. So the biggest thing that I want to recommend, whatever pair it is, whether it's gold, US 30, AU, GU, GJ, whatever pair it is, have a trading plan, have a goal. Have a goal, and once you hit that goal, close the order. The more times you're consistent, the more times you can do it again. That's how I look at greed. The more I can do it, the less greedy I become. Cool. Next one, right? Confidence. Like, I see a lot of people struggle with confidence. Everybody uses the same technicals. Everybody uses the same trend lines. Everybody uses the same market structure. Everybody uses the same support and resistance. Everybody uses zones the same. The technicals are all the same. What matters is your interpretation and your understanding of it. So real quickly, if you're not confident, the number one thing you should be doing as a trader is back testing. So what I want to do real quickly is, I know, who's a fan of US 30 in here? Drop a 1 in the chat. I'm trying to see something. If you fuck with US 30 and you day trade US 30 a lot, just drop a 1 in the chat. When it comes to my relationship in US 30, right? Let me remove all drawings. I may not day trade this shit a lot, but a majority of my students that are in my previous course, they look at US 30 a lot, right? Now, US 30 is one of the new pairs, but if you're not going over, the thing is, like with US 30 is the monthly, you can't really use that much data from it, right? So then the weekly, it has somewhat not data, but it's relatable. But the daily, I feel like when it comes to US 30, the daily is perfect. The reason being why I say the daily is perfect is it gives a perfect mix of market structure, but also your supply and your demand zones. You can put them adequately on the charts and make sense of where you are and where you're going. Now, it's clear as day that US 30 is in some type of uptrend, but it wasn't a downtrend and went back in an uptrend. Now, the biggest thing that's going to sharpen your skills is back testing. Now, when it comes to back testing is going over previous price and using your technicals to make sense of what it did. So I'm going to take my time, and obviously you can see I have a supply zone down here and a demand zone down here. And you can see what appears on the charts right now. It looks like I have a little bit of a downtrending move, right? You can see that we came down and whatever the case. I'm going to back test a portion of it, and I want to show you guys how to back test properly. Now, when I back test, you don't need to use the rewind tool, essentially. You're just trying to understand what price did at that moment in time. So first thing when you do when you come on your charts, after you draw your supply and your demand zones, you want to draw your market structure. You want to make sure that you're clear on the trend on where it was at currently. That's the number one thing you have to do when you're back testing. You have to understand, you have to be able to see the trend, because once you see the trend, you know what should come next, right? Now, clearly on the daily, it's a little funky, right? You can see the downs, you can see the pullbacks, but I want to focus solely on right here, right? This is the area that we're going to back test. Right around here. The reason being right here is because we converted from a downtrend to an uptrend, but we maintained the downtrend structure. So the easiest way that you could have spot that was, obviously we were in an uptrend. We have to wait till our previous market structure higher low gets broken, right? Now, what determines a higher low for me? You need a sense of 2 or more back-to-back candles as a minimum to determine a higher low. There are more factors like fibs and also market structure that determine a little bit more. But we could see right here that we were in an uptrend, clear as day. In an uptrend, we came and it was this push down that broke this structure right here. Clear as day, we entered a downtrend. So from here to here, we broke structure. This pullback should be our first lower high. So what we're doing from this high point to this low point, we're seeing where we were at, right? Clear as day, we came and we respected a 70.50, exactly. So what I do right away when I do that is I draw an eclipse, right? Now, obviously we know what comes after a lower high comes a lower low. So we can expect a continuation downwards. Now, the tip to this is, if we made a previous lower low, obviously we have to print lower than that low. So when you're back testing and you're looking for things like this, you're casting out your technicals to gain confidence. But in you going over different moves and applying your technicals, you're starting from a higher time frame, and then you're going on a lower time frame, and you're seeing how the lower time frame was affected by the higher time frame move, right? So we could see right here, right? When we're looking at taking certain positions, taking certain moves, what dictates the move is our candlesticks, right? Our wicks, our bodies, our candles. We need to know where buyers and where sellers are in control at, because that's when the market deems it as safe for us to enter and exit the market. So we could already intel that right around here on this 12-hour time frame, this is where sellers fully took over at this peak, right? Now, there's a lot of things when I say back testing that comes into foreplay. You can see that right around here as well, that we had a QP, the 750. You can see that the 35 is the whole number. Whenever you're doing QPs, just a quick crash course, just in case nobody knows. I would hope that it's 2023. I would hope that everybody knows how to do QPs. This is the whole number. This is the number that repeats itself on the side of your graph. That number doesn't count. Usually it's the last 3 digits that indicate what a QP is. And they normally go in whole numbers of 750, 500, 250, and 00. So right around here, we had a QP that lined it up as resistance as well, that not only did we get one touch, but two touches. Now, when it comes, like I said, again, to back testing, you're going over previous market conditions that happened, and you're making sense of what happened. You're casting all your technicals. What you're doing is you're strengthening your arsenal, and your arsenal consists of your trend lines, your fibs, your QPs. You're strengthening the uses of your arsenal. So when it comes to live conditions, you already understand and you already see. So fast forward to here, all we did over here was use market structure and a QP, which is not even all your technicals that you can use, but I'll use the same right here, right? We came down, we pulled back up, we came down, we shot up, right? Then we pulled back, then we pulled back, then we shot up, then we pulled back, then we shot up, then we pulled back. You can see instantly right here that ideally we broke structure. The same thing that I looked for here is the same thing I'm looking for here. So I know right here, the market deems it as safe. And then what did I get right after that? If I zoom into the very, very details, I got a very strong bullish engulfing, right? Now, this is the 12-hour. There's so much more lower that I can go to see the details. So allow me to go a little bit lower. I chose to go lower right here just because this is closer to price action. I know if I try to go lower over here, the lower I go, the harder it's going to be to kind of see. So I didn't even want to waste my time, but I wanted to start off with a principle so that way you guys understand. Drop a 1 in the chat if you're following along. Just drop a 1 in the chat. Cool beans. Again, what we're talking about right now is confidence. What you need to boost your confidence is back testing. What back testing is going over previous market conditions and applying your technicals to make sense. I appreciate all the ones. Love y'all. Right? So we draw, we pull back right here, this engulfing, right? Based off the 12-hour, we go down lower. Let's go down to like a 1 hour and let's see what we see. Let's right click, let's hit reset charts. Let's go over here. You can see that the same posture, what I mean by posture is the detail of the market conditions still apply from swing high to swing low. Obviously, we have a little bit more detail, but you could see the gist of it, and we have a lot more details. You could tell that would appear like US 30. The higher time frames are going to drive the boat, but the lower time frames are what's going to make the stronger candlestick patterns for us to take the trade, right? So when you have the lower time frame that's making the stronger candlestick patterns, you always want to mark off your supply and your demand zones, right? So clear as day, we have another one right here. You also want to color coordinate your supply and your demand zones. You want to use them on certain time frames so that way you know what color is for what. And you can see that this was a previous high. We came back low. We made it even higher high. We came back. We struggled to make a higher low until we came back right here. I can instantly tell you that from right here to right here, I have a fib. You can see that we fell into our golden zone, right? But we respected 50%. 50% is a market structure level for me. So then, boom, I would drop an eclipse right there because that is a valid higher low. Now, whether I take the trade at the close of the candle, or if I'm on the lower time frame and I get the sniper entry down here, being in is being in. And once you practice this same little strategy over and over and over, when you approach the live markets, when the markets is open, it's the same shit. You're applying it on there and you're getting prepped for the next move. So that's how you're going to deal with confidence. Next, impatience. Boy, this is a big fucking one. And I'll say it's a big fucking one just because if you traded GJ this weekend, you either bought or you sold. If you traded any pair this weekend, you either bought or you sold, right? You either bought the pair or you sold the pair. Now, when it comes to GJ in particular, I want to say GJs just because I only take buys, right? I can take the sells, but I only take buys. Throughout this whole push, I want to tell you that I had a fib that was based on the weekly time frame, right? Now, ideally, we draw our fibs from wick to wick. If you don't know, now you know. We draw our fibs from wick to wick, a wick of a higher low to a wick of a higher high. And you can see that we landed on 70.50. However, when I go to the daily, whether you move the fib or not can be dictated differently, right? Obviously, you could move the fib up here from this way because, you know, structure is way closer to here. Regardless of what you do, you get what we call a PRZ level. And a PRZ level stands for price reversal zone. And at these PRZ levels, you're waiting for something magical to happen. The key word is waiting, right? So you could see through this whole drop. If we were waiting, we would have saw that 38.2 got no action. The only thing that got action was 70.50. And when 70.50 did get some action from this tested candle pattern right here, which I'll highlight, tested candles, change your life. From that tested candle pattern, which is on the daily, if you were supposed to base your bias off of that, you could have took a total of 226 pips. Now, keep in mind, the drop really happened here. The whole point of me telling you this is when you dictate where buyers take over from the higher time frame and you go down lower, you're good. So right around here, right? This is where obviously we were at, and this is where sellers took over, right? Now, in this regime of where sellers took over, keep in mind, because we're on the daily pattern, we know that right here, we have an area of support. Keep in mind, look how large the wicks are. So now, if we were supposed to go down lower to a lower time frame, we could see where we were up in the trend, because obviously we came from a downtrend. We could see the tight little consolidation. Now you can see the push-up. Obviously, I want to go lower to where we have structure and it makes sense. So what I'll do is I'll start my pip from here. You can see that from here to here, we had a little bit of 23.6 action. If you guys don't know, 23.6 isn't a market structure level. And the whole point of this, guys, again, when I'm showing you this, is to teach you patience. Fibs teach you patience. 23.6s, the market's either going to range or continue. It's either going to range or continue. If it ranges, let me show you a trick. Clear this off real quick. If the market is doing this on a time frame, for example, like the 1 hour, go up to the 2 hour, go up to the next time frame, and see if you see the same thing. 9 times out of 10, you're not. You're going to see a little gradual movement. If that time frame of the 2 hours is still not clear, go up to the next one. Go up to the 3 hour. What the thing is, consolidation tries to trap you from what you need to see or what you need to see. So because it consolidates, you already know that you should be selling at resistance and buying at support. That is good when you're on a higher time frame consolidation. When you're on a lower time frame consolidation, what you really want to do is you want to take your time and scale up eventually to where you see something like this with momentum or something like this with momentum to where it's clear as fucking day from that higher time frame. What direction are you going to go? Can I drop ones in the chat if that's very clear? I appreciate y'all. The show must go on. Thank you. All right. So back to the charts. So ideally, this is what happened. So from here, sellers took over. You can see that throughout these areas where we would ideally have zones that would keep up with price, we never got a retest of none of these shits. Price literally disrespected every QP. I'm sorry, every PRZ level. Every zone that could be dragged from left to right was not respected. It was not being moved normally. It did this in the period. It really started on Wednesday, but it's starting on Wednesday. It dropped to like a 23.6. So the initial thought was, okay, we already consolidated. Maybe it's going to consolidate and push back up. Boy, was we wrong. It dropped. So, right? So I know what you're thinking. Drew, there's fundamental analysis that plays a role into this. I didn't need to look at fundamentals to even know that this was news, especially when I changed my lower time frames. Y'all don't see not a single retest. We didn't come back and retest nothing. Look from left to right. This is the 30-minute. We broke right here. Okay, we got one retest here. Broke right here. Okay, got a retest here. But then look over here to the left. That's it. We go back even to the 45-minute. Nothing. It drops straight from here. Now, the whole point of retest is if it retests on one time frame, it should retest on another. You go down to even a minuscule of the 5-minute. The 5-minute was slowly following lower time frame trend. But if you look, we broke right here. We never retest. We broke right here. Okay, we got to retest. We broke right here. We started getting retests. We broke here, never got a retest. To the point to where we came right here, and boom. So my whole thing is if news follows the lower time frames. So here's a gem to help you deal with patience. If you want to fast forward through news, if you want to only trade back under healthy market conditions, when the market conditions are normal again, what you need to do is go to the higher time frame, right? Because news cannot invalidate higher time frame supply or demand zones. When I mean a higher time frame, I mean your monthly, weekly, or daily. News cannot invalidate higher time frame market structure zones. So if you're drawing your zones adequately, if you're drawing your zones accordingly, news will not break through that. Boom. Super simple. That is what you deal for in patience. So just to backtrack, in patience, you want to obviously have your fibs and you obviously want to have QPs. Now, I didn't touch base on QPs, but I will now. I took this move today per market close. I don't even trade on Fridays, but the move was too irresistible, right? I had enough data to see and drive the boat on where this move was going based off of confidence and based off of looking at it, right? So boom, we had this move right here, it pulled back, it came, boom. Buyers took over right here. So what I do when buyers took over, I have a 750 QP. I like to draw a line here because buyers took over that QP. On top of that QP being at support, where price engulfs at, on a time frame higher than the one I'm on, it should act as an area of support. You can see right here that I based it. No candle initially printed and closed underneath the same line. Do you see where I'm coming from? I go even higher. No candle printed and closed underneath this line. This candle printed, the next couple candles came back up. So ideally, it acted as support throughout a fluctuation of a lower time frame all the way to higher time frames. So when you draw these on the lower time frames and you're looking for them, you're seeing how price obviously makes, and like I said, reacts as support. So this one is based off the 3-minute, as you can see right here, and it acts as an area of support. So what dictate and what made me do these positions? Well, this was the very first position I did at 10 lots, right? So yeah, guys, if y'all know how I trade, when I enter, I normally have a 13 pip stop loss. In these market conditions, I use TradingView to base my stop loss and not MT4. So what does that mean? That means that I'm active on TradingView as I trade, and I'm watching when the trade obviously goes against me to see how it closes out. Remember, this entry is based off of this candle. So once this candle closed, took the entry. Boom, I instantly went into profit. Instantly, right? For a total of 30 pips. My trading plan is 40 to 60 pips. So I did not get my trading plan. So what do you think I did? I held it out. I went to profit 30 pips. I only went negative 20 pips, right? If I would have set my stop loss, I would have got stopped out. I had to test the realm and see if this 750 QP was going to hold and if this support line was going to hold. No, this candle printed right here, but then the next candle came back up. So me using that little white line right there on top of the QP, I'm gauging the support of this range right here from this line to right here. Ideally, it should come back and touch the QP first, and it should be able to come back and print past the engulfing. I had a little bit of struggle right here where I was a little nervous, but what helped me get over my nervousness was this was the lowest point that it printed right here. This point wasn't as low as this one. So it gave me confidence that, hey, this is just the retest. What do we get? Another candle. Then we got another tested candle that saved me. So then boom, I'm ranging. I have a zone that I drove obviously from here to here, which I believe was based off the 1-minute time frame. So I'm on the 1 minute gauging these candles and making sure I understand what I see, right? And you can see that this median from this candle right here was being used as a median point of support and resistance throughout the whole move. Again, the main point of me showing you this, not to get too into detail, was that the QP saved me, this random line saved me, and the QPs is what allows me patience to enter the move. So always keep in mind that QPs are what's going to kind of save you when it comes to patience. You want to wait for it to make support or resistance off of them, and then you take your trade. Next, consistency. What do you need to be consistent? You need to follow your trading plan. In following your trading plan, you don't need your trading plan to say, hey, I need to buy off a bullish engulfing. That should be muscle memory for you when you're trading. You don't need a trading plan to tell you when to buy or when to sell. You need a trading plan to explain the market conditions of if it's a downtrend, what you're looking for, if it's an uptrend, what you're looking for, and vice versa. Does that make sense, everybody? You need the market conditions in order to tell you if you're buying or if you're selling. That's what you need your trading plan for. On top of that, the only other thing that you need for consistency and also to kind of help you out, you need to be able to kind of see the market conditions as far as for where you are and where you're going. So clear as day, we're at an area of support right here. Clear as day, we have a QP, right? Clear as day, we can kind of see that we are in a downtrend, but what are we seeing? We're seeing that this support is being held. So as far as for what you could do to be consistent, you should be seeing the same thing over and over as far as for support and resistance playing into role and playing into action. But also, if you were backtesting accordingly and following your trading plan, you should have been able to take a trade and step away. What makes the best traders in this world is being able to walk away from the markets and not stay and add on more risk to their positions. So in my retrospect, when it comes to trading, the trader that's always able to walk away with something is the most successful trader. That's the trader that's gonna live to trade another day. They were disciplined to follow their plan and they were disciplined to walk away. Once you're consistent with the lot size that you're using, I personally like to give myself a week span, like a week, maybe a week and a half. After a week of consistency using a lot size, I up the lot size. Why would I take on the same risk over and over if I've been being consistent? I reward myself. I boss myself up and I graduate to a higher lot size. Come Monday, I'm going to be doing something crazy. But I'll wait for Monday to kind of show y'all. I see y'all fucking faces. Y'all like, what the fuck? What's Monday? Y'all been asking me to do this for a long time, so it's coming. That's all I'm going to say. I'll leave it as that. So is everybody clear? Because I'm looking at y'all. Is everybody clear on what we need to do to get over and be consistent in these market conditions? All you want to do, and big shout out to Anita. She's in the Boston Up family, and she was able to kind of catch this big downtrend drop off of being consistent. So if you're here, I know you're here because I saw your name for registering. If you're here, big congrats to you, right? The show must go on. Let's continue. Now, if you're struggling with technical analysis, the biggest thing that I can tell you in general, because everybody struggles with technical analysis. In the beginning of my journey, I wasn't so confident in none of the technicals that I use. I was fucking horrible as shit. I was drawing trend lines backwards. How do you draw a trend line backwards? You're supposed to draw from left to right. My crazy ass was drawing from right to left and thinking it was right. Like, no. But I'll save that story for another time, right? Obviously, you want to be a part of a group, right? Now, you want to be a part of a group, or you want to form a group. You want to do something to where you're around like-minded individuals that you can use yourself to bounce off of each other. Now, what I mean by that is I think it's Christian. I see our guys there, and I saw you sitting with somebody that looks like their buddy, right? So, for example, you're using him to bounce off of you. Like, yo, bro, you think I did this right? Nah, that's bullshit. Yo, let me DM somebody so I can, you get what I'm saying? The whole point of it is you're using somebody to validate, but you're on the journey together. That is very powerful in this industry. That's not done enough, right? And the reason why I say that, and I see Slick the Rich, it looks like you got somebody over there with you too. You know what I'm saying? Like when you have a couplet, as I like to call it, it enhances your journey. Why? Let's say you do something wonderful in the markets today. Your partner is going to be like, well, damn, I need to get that bag too. And y'all bouncing off of each other, using each other to elevate and grow into new goals. Before you know it, the cars, the money, the consistency, everything then came off of just having that like-minded individual to help push you into new limits. Trading is boring as shit. Once you really get to it in the nitty-gritty, trading is boring as shit. But again, if you're struggling with analysis, find a group, use your resources, and apply what you learn. When I say find a group, you either find a group or you create a group. When I say use your resources, there's so much free resources. There's a book I preach about, the Candlestick Trading Bible. That book has changed my life. There's a whole bunch of YouTube videos There's so much free content, but most importantly, that free content isn't going to teach you a successful strategy. It's only going to teach you on how to sharpen your technicalities. So if you need that to use to help you backtest accordingly, don't be lazy. Get to it, right? So again, when it just comes to all these things of psychologicalness, of when you're in the markets and when you're trading, just keep in mind, those are some things that you can do to cover it. Now, when it comes to the technicalities, we all know what's under our arsenal, right? This book right here is my friend. And what I mean by that is I use this book day over day. This book doesn't leave my desk. This book right here, right? This book is a book that I created to kind of help myself be consistent, but also to just jot down my ideas, right? Now, within this book, I have a basic generic trading plan. This, I don't more so need to look at this every day, but this portion right here, my confirmation checklist, this is important. Now, the reason why I say it's important is because you need to know the confirmations that you're getting when you take a trade. You need to know, right? So right around here, you can see that we were in a downtrend, right? You need to be able to mark off your previous lower high. You can see that, for example, like right here, and I'll just show you the confirmations that I got when I took this trade, right? I had a lower high here, right? I had a lower high here, and essentially they just kept on getting tighter to the point to where even if on the smallness of a time frame, I had a minor break because this push up, we retested the trend line, which is super, super key, the retest, and then we shot off, right? But within this, I just showed you the lower highs and showed you the transition. The next thing is going to be, obviously, I have a QP. Obviously, I drew market structure before. Obviously, I have a zone. I have a zone because it's big and red right here, and so on and so much. Obviously, I'm buying at a higher time frame fib level, right? That's what that little blue line there is for. And that blue line should be used as support, right? Because if you're in an uptrend and you're using fibs, these fib levels ideally should be used to stop the downtrend momentum and to reverse it back to the upside. So what happened right here? We broke, we never even came from a retest and we shot all the way up. Essentially, the two entries that I placed, especially with this beautiful retest of this QP right here, which is very quick when I took it, I was able to kind of be consistent with catching this overall up push very quickly, right? But it's the same back testing, it's the same skills of me going over it that allowed me to kind of get there. So here's one thing, right? Let's just say you were like Juicy Banks, right? And I'm not scared to tell y'all because I'm very transparent. You're not Juicy Banks and you bought during a selling market, right? And you got your ass stopped out. What do? Let's just say, for example, and this is what I do, and this is how I always protect myself. This is how I always bounce back, right? Let's just say you're trading on a 100K account, right? Funded or your own, right? If you're trading on a 100K account, your daily loss should be 5%, which is 5K. Your maximum loss should be 10K. I want y'all to shake your heads. Am I right or am I wrong? I'm right? Cool. If you're doing this, you should be nowhere near fucking this if you're under or on 100K. You should be nowhere near this. That means that you should not start off using 10 lots because you're only giving yourself 5 tries, right? The increments that I do my measurements within is 10 pips. I want to make it make sense, right? So let me backtrack a little bit. If I was supposed to use 10 lots, I'm giving myself 5 opportunities at 10 pips each with a stop loss. What does that mean? That means that if I take a loss, that's equals to 1K. I don't like that. That means I'm only giving myself 5 tries. If I do a 5 lot, essentially, that means I'm giving myself 10 tries because double, right? So when it comes to risk management, you want to find a lot size that you're okay with your trading plan to follow, but you're also okay with risking. Think about it. The same way how you treat these funded accounts is the same way you need to treat your real account. You are not going to risk what you're not okay with. Ladies and gentlemen, if y'all have $300 left in your name, are y'all going to risk $300 on a position? Fuck no, you're gonna go broke. Now, if you have $300 in your name, are you okay with risking a 0.10? Are you okay with risking a 0.5? Are you okay with those risk parameters? Yes. So my whole point is this, is you treat this, not this, you treat this like it's your baby, like it's your real life, like it's your real account. You want to stay far away from this number as possible. And your very first goal is to double this. By you even making 5K or even making 10K, you can increase your lot size. This is what's going to buy you your freedom. That's my mindset on when I think. Whatever my daily loss is, I try to think, what lot size can I do to make this so I have that additional cushion, so then I have my freedom to do these bigger lot sizes. So for example, right, let's go back to the charts. Again, let's just say you got your ass stopped out. Let's just say you took Juicy Bank signals on a Thursday and you got stopped out. So you took another sell. Another buy, you got stopped out. After I get stopped out 3 times, I cut my lot size in half. Why? That's safe. After 3 attempts, I cut my lot size in half. Why? I'm trying to be safe. And clearly I'm doing something wrong. I'm not analyzing the markets correctly. I'm not doing something correctly. So because of that, I'm demoting myself until I'm able to gain consistency again. It's okay to demote yourself. Sometimes you got to take a step back in order to go forward. It's perfectly fine. So again, if you were using 5 lots, you'd go to 2.5. If you were already using 2.5, you'd go to 1.5. Whatever that lot size is after 3 tries, you're cutting it in half, because think about it, right? Let's just say ideally that I was using a 5 lot to try to build this up. After 3 losses, that's that, right? Now I got that number based off of 10 pips, because obviously stop loss should be anywhere from, your stop losses should be tight when you're trading on these prop firms. You don't want to have a big stop loss. If you're going to have a big stop loss, here's another tip. If you could handle doing a 10 lot and getting stopped out at 1K, you could handle doing a 5 lot and getting stopped out at 20 pips, because it's the same thing as 1K. If you're okay with, again, you have to find that number that you're okay with losing to make a reward. And once you find that number, there's a lot size to match it that increments in 10 pips. Does that make sense, everybody? 10 pips is what's going to change your life. I risked 10 pips and made 300 pips. I risked 10 pips and made 200 pips. You don't need to risk a lot. So let's talk about these stop losses real quick, because that's going to tie into my next subject, right? Ideally, this buy that you saw that I've taken, right? And I'll show you on GJ, I'll show you on US 30, I'll show you on gold. I'm all going to show you the same fucking shit on 3 pairs. This buy, right? I'm only going to focus on this buy because this was the right one. This was the right move, right? So obviously, boom, I took the buy, boom. This right here is a lower time frame zone. I'm only looking for price to react off this lower time frame zone, right? I have a zone that's within this defined range that should be even higher. You can see I have a tested candle right here, so this doesn't count. So what I'm going to do, I'm going to go higher. Ideally, I'm looking for these wicks. Now, you know, when you draw zones, you draw it from the body to a wick. So when I draw this zone, I'm drawing from this body to this wick, right? You're finding these zones. If you're buying, you're finding the zone underneath your buy. If you're selling, you're finding the zone above your sell. And ideally, with these zones, they are a range of price to protect you from getting stopped out. So if this entry right here, this entry, obviously, I'm going to be honest, it was sloppy as fuck. It was sloppy. I could have done better. That's what I learned. I'm not scared to tell y'all that. I should have bought off the QP. I should have been on the lower time frames analyzing heavy, but I had a little bit of fear. You know what I did to overcome my fear? Bro, look at all the details you're getting already. You're getting strong support at this QP. I had to remind myself. I had to fluctuate through these time frames and look. And when I got to a certain time frame, I already had got the engulfing, right? But this zone is based off my 7-minute, right? You could see that this zone protected me and that nothing broke out of the zone. I wouldn't have known that until I let it play its role, right? But entry-wise, I had no business setting my stop loss at 13 pips. My stop loss would have to be this. So once you already know what you're risking for your reward, you have to be okay with it. So I did a 10 lot. I had to be okay with getting stopped out or getting close to being stopped out at 20 pips. I had to give that zone a chance to protect me. You dig what I'm saying? So because of that, I risked 20 pips. Obviously, my reward was much more, but I let it breathe. That's another thing, guys. Some of y'all, you're not letting your trades breathe. The quickest way to shoot yourself in the foot when trading is setting a stop loss as soon as you take it. Why would you do that? I want you to look at me. Why the fuck would y'all do that? Come on, guys. Y'all better than that. You never set a stop loss as soon as you take a trade. Never. You let that shit breathe. You know why? Because you letting it breathe, you analyzed before. You still have to analyze after you take the trade. So why would you cut the trade short? Because you want to be impatient to analyze. Does that make sense? We all trade technical analysis, right? Can I get a 1 if we trade technical analysis? Everybody uses technicals in this day and age. Every fucking body. If you trade just fundamentals, it still requires technical analysis. So since we all trade technical analysis, we need to give the times technicals to show ourselves. Right? So on this 7-minute, every candle on here takes 7 minutes. Boom. If it took these 2 candles that, I should be able to go to the next time frame and see rejection. Okay, boom, let me go up higher. Boom. I could already see that I'm getting a lot of wicks in this direction. This gave me the confidence to hold my move. Right? Then we got this very big, strong, big bitch candle. This candle was so goddamn strong. Look at that. Barely no wick. Look at it. This candle is strong. We got 2 of these back to back in a defined area, and we're getting wicks. That's letting me know something is happening. If I was supposed to draw this on this 15-minute time frame, which the 15-minute, I ain't gonna lie, 15-minute be saving lives out here, right? Look at that. You would have been able to see this, right? Let me show you on US 30, for example. So I know y'all guys are dying to probably see it. Let me go to the 1 hour. Boom. I'll focus on just this part right here, right? Boom. Obviously, we can tell we're in the uptrend. Obviously, we can see a buy coming in, right? Let me make sure that's on the wick. Let me see. What move did I do prior? All right. Let me base it off of this one down here. I know this is probably the easier move, but it's something to kind of base the formalities off of, right? Obviously, we came, you can see that we ranged. It was this push up that broke the range. You always want to find, whenever it's ranging, you always want to find what push up or what push down broke the range to base your fib off of, right? Instantly, when we make that high or that low, we want to always look to our left to see what was there. Now, in this situation, right, we have multiple zones. We obviously got this one, which one was respected, but then we got this one down here, and then we have one right here. These 2 are within the area that I'm looking for. I don't have one there at 38.2 to use, and I don't have one up here. So boom. When it's dropping, you don't know where it's going to stop at, but this is the patience. This didn't do it until what, the next day? No, at 12 at night, or 12 that afternoon, right? So then right around here, what else do we have that we can add to this equation? We have a 500 QP that needs to be broken, right? But also below that, we also have a 250 QP that's being used to support. Stay with me. With US 30, you rather be safe than sorry. What I mean by that is with this motherfucker, you want to get your confirmations ahead of time and then take it off of continuation. That's how I feel like it's safe. So you see how we got this engulfing right here on this 1 hour? Let me go down to the 30-minute. That same area that I got that engulfing, I'm just trying to understand the structure of where buyers took over at this area. You can see that from here, we're in the downtrend as planned, because on the lower time frames, I'm expected to see a downtrend, right? Let's go to the 10-minute real quick. And you can see right here that, look at this, it's so fucking beautiful. But again, what I'm doing right now is back testing, right? Bing, 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 bing. Look at this. This pullback, and then we shot up. What happened though? We came at a wick and retested that, and then got momentum, respected the QP, and came back. With US 30, you have to have these things draw into existence and then take the move. That's how I'm profitable on US 30. I personally don't trade US 30 because this motherfucker takes too long to give me a move. When I look back at GJ, I could have got a 50 pip move on GJ. Why would I want to wait that long? Yes, it pays me out more, but is more money worth it? When I'm a day trader and I want to trade every day with my people and have fun. So you got to trade a pair that suits your preference. My whole point of it is though, is that right here, from this little switch of a flip is where we broke, we came back, we got the retest, we got another engulfing right here, literally. And then we took off, right? Right around here, we got a tested candle right here. You could have bought, and then let's just say you're buying off the QP, the safe entry, right? Let's say you bought this tested candle. My stop losses for US 30, right? I normally don't do that whole 1,000-point shit. I'm sorry, I don't. I normally have a stop loss of 500 points. Call me crazy, call me what you get. Call me crazy, call me what the fuck you want. When I'm taking it off of a 30-minute or so, oops, moved the wrong thing. I saw y'all faces. Y'all like, what the fuck? How do you manage? Right? I manage because I let it breathe, but then I know where I am, right? Keep in mind, what helps me base those stop losses, as I told y'all before, is my zones. It all comes back to my zones. As long as my zones get tested and reacted to, boom, I took that trade. I don't set the stop loss right away. I had my confirmation here that buyers took over. It came back and did the retest that I needed to do. I entered off the QP on the lower time frame. Boom, I took my entry. I let it breathe. I went instantly into profit. Stop loss set. Boom. If you do it right every single time, and you wait and you have patience for it to react instead of just acting abruptly, you'd be safe every single time, and you'll protect yourself every single time. Every single fucking time. If I'm able to do this shit, I know y'all can do it. The difference that separates me between me and y'all is I'm on these charts every day. And if you're on these charts every day, you can't be scared. Y'all guys are what's next in the community. Y'all guys all have the power to beat this shit up. Don't ever let these charts beat you up. These charts aren't shit. I fuck these charts up every day. You know why? Because I'm confident. Why? Because I look at the same shit every day. I'll show you on gold. And I ain't gonna lie. This shit right here, like I saw some people complaining. Watch this. I'm on a 4-hour, right? Zone, right? Consolidation. The number one thing that you do when you're enter consolidation is you mark off your support and you mark off your resistance until you get a breakout, right? You keep those support and those resistance areas until you break out. But if you're drawing structure, you could have instantly tell that as a 23.6. We pulled up a little bit and then we retested it and then we broke off, right? So right here needed to get retested. Right here was the previous high outside of this one that need to get retested. But if you pay attention to the highs that need to get retested, because this is how I look at it. Again, let me clear this real quick. If you're in an uptrend, you're paying attention to the higher lows. We were taught to do this from the beginning of time of technical analysis. What I'm here to tell you is, at your higher highs is where you're going to get a retest of your higher lows. At your higher highs is where you're going to get a retest of your higher lows. So if you're paying attention, you have your trend line, you have your T's crossed, your I's dotted, you know where you should have a minimum expectation to where it's going to pull back to. before you go long. And with that expectation, you don't shoot yourself short. A lot of people I know got stopped out by this candle in gold. I'm here to tell you that I may not have been able to prevent it with this candle, but I'm here to tell you I would have potentially saw it coming because it's structure. Does that make sense? Structure is the main boat, the main bread and butter to how it moves. And even if your ass got stopped out, there's a entry there's always another entry meant to be had. Never, the thing is like, with people, they live in the moment of when they get stopped out. You got to continue going. I'm not saying to revenge trade and take 1,000 trades and continue going in that same day and blow your fucking account. No, I'm saying to pace yourself. But if you could regain where you see structure at, jump back in that shit. Don't be no bitch. You ain't gonna get nowhere being a bitch for your dreams. Sorry. Cool. So that's just a little bit of risk to reward. So we talked about how I build these accounts quickly, right? I'm able to build these accounts quickly. When I start with the $1,000 and I'm able to build it to like 80K, 50K, and all that crazy stuff, that's because I'm taking these entries, I'm day trading them, but I'm evolving into a swing trader and I'm looking at the bigger picture. The bigger picture is always important. Keep in mind, we based our fibs off of a higher time frame. You think them little 60 pips gonna mean anything by the time I get all the way up here, back to the higher high? Nah. So you gotta build the confidence to hold your trades, right? But how do you do that? You don't use the same big ass lot size. Practice on smaller lot sizes. Practice on doing a standard. A standard is what opened my eyes to it. I did a standard and I held that bitch for 300 pips, right? 300 pips. I did a 10 lot the other day with the same mentality as that standard, and I made 30K. 30 fucking K. You know why? Because I did it, I tested it on a smaller account to where I didn't even care about it. And then when it came to the live account, I didn't even care about it as well. I just did it. And it so happens that the market conditions were good. I was able to make that higher high on that bigger picture a lot more quicker, which was actually these two moves right here, where we shot up from right here, and then we did this push up. And then I think I got stopped out somewhere around here. And I took a buy right here. And then I got stopped out somewhere around here. And I caught this buy right here. Got to be transparent. So the key to building accounts is to hold your moves, obviously. It's no brainer, but to pay attention to the bigger picture. There's always a bigger picture that needs to be respected. Give the charts time to respect that bigger picture. If y'all don't know this little secret, I'll tell y'all this. And let me whisper it to y'all. On the higher time frames, moves from zones to zones. I'll repeat that again. On the higher time frames, moves move from zones to zones. So if you have a zone that's being respected from here, and you're in an uptrend, it's going to go up there. If you have a zone that's being respected from here, it's going to go to that zone. Give the market time to move and time to breathe. It's no rush. A lot of y'all are rushing to make the bag. I'm here to tell y'all, slow down. It ain't no rush. My goal is to make $1 million this year. If I make $1 million in 2 months, I'm good. That means I don't have to trade for the rest of the year. But if I take my time, I'm trying to space it out and make $1 million throughout the period of the year. And I'm trying to make sure I give my students and y'all my biggest attention, which is going to obviously lead me into my next subject, which is for the next 20 minutes, y'all guys can ask me any question y'all want. I don't care how crazy y'all think it is. Y'all can ask me. Y'all timer starts now. So give me a second. Let me unmute y'all. Say your name. Say where you're from. Be nice. And give me a second. I didn't start your timer yet. So hold on. Let me stop sharing. It doesn't matter what the question is. Again, guys, I don't care if you're going to ask me about taxes. I don't give a fuck. I'm going to try my best to answer them based off of my experience, because that's the only experience I can give you, based off of my experience, and so on and so forth. So again, I'm going to give you an ability to unmute yourselves now. Unmute yourself, say your name and say where you're from.
Yo, what
Hi,
up?
Drew.
Drew, up on.
One person at a time, though. One person at a time.
Okay.
Nice.
All right, ladies first.
Ladies
Hi.
first. Love that.
My name is Akasha. I'm from Arizona. I've
Akasha,
been
can you
trading.
come up on screen for me, please?
I'm not, you know.
It's all right.
TM
It's all right.
ready.
I get it. I ain't gonna put the gun to your head. It's all right. Go ahead. Talk to me though. What's the question?
Okay, so I've been learning for about a year now, and
Okay.
I feel like my technical analysis is right. It's on point. But and I'm doing a challenge. I had this challenge since October, and it's like it's a 100K challenge, and it's 3 of them you have to pass. I passed the first one, but I'm stuck at the second one because when I enter, I always move my stop loss to entry because I have that fear like it's gonna drop down and I'm out. You know what I mean? So and then I keep forgetting that it's gonna retest. Do you move your stop loss to entry? And if you do, when do you feel like?
That's a beautiful and wonderful question. So let me ask you a question. Are you okay with the lot size that you're doing, first of all? Are you okay with that risk?
My lot size is all over the place because around October, the market was okay. And then, you know, the holidays came, it's like, oh my gosh, I'm about to lose this challenge. And so I'm like, I have to like stop. So I had to like scale down my lot sizes because I was doing 5 and then I went to 1. Now I'm doing 0.25. You know what I mean?
That's fine. So at a 0.25, right? And how big are your stop losses? Are they 20 pips, 30 pips, 50 pips? How big are they?
They're around 20 pips.
All right, so they're around 20 pips. So that means that you're risking about 50 bucks per position, right? Now, when we're talking about structure, I had to write it down real quick. When we're talking about structure, Akasha, what you need to always remember is that if you're buying at a support, the move can come back, it can retest it, it can build momentum, it can do multiple things. So just like as I told you, with that zone, try to incorporate zones into your support areas or where you're buying at, look for those wicks, and make sure your stop loss is always below this zone because it's gonna take time. Always gonna take the time price because watch this, it can retest here.
Yes.
Go up, or it can retest this one and come up, or it can retest this one and come up before it goes long or transitions. So you also have to give it that time. Keep in mind, sometimes the time frame that we're looking at shows us that minuscule data. Don't forget that if this is the 1 minute, you can always go up to like the 5 minute and see what that bigger picture is saying. Don't forget
that's what I need to do.
Go up to the 10 minute and see the bigger picture. And on those bigger time frames, it's going to show you a bigger perspective of that support or that resistance. So remember to give it the time that it needs, which is why I said before, you don't want to be so quick to move your make 10 or 20 or 30 pips. I personally don't even move my stop loss and profit. I mean, I don't, just because of the simple fact I'm okay with whatever I'm risking. But then when I'm ready to take my reward, I pull it all out and I walk away.
Right. Okay.
So try implementing that, okay?
Okay, thank you, and congratulations on the baby.
Thank you so much, man. Thank you. Who is next?
Yeah, Drew.
I'll go ahead.
Yo. Drew?
Say your name and where you're from.
Yeah, it's Maurice from Jamaica.
What's going on, Maurice? Talk to me.
Yeah, I'm good, man. I could have swear when GJ was going down and it was around 158, that same buy that you caught just above 156, I could have sworn I saw that same pattern on the 5 minute. Could you just go to the 5 minute?
Yeah, I'm already on it.
Yeah, when price was around 158.
158? Right around up here?
Yeah, right there. Perfect, right there.
Okay, so you want to know what's the difference between that move down there and this move up here?
Yeah, precisely.
The difference between this move up here, watch this. Right? The difference between this move up here, we had structure to maintain, right? This we never broke the previous lower high, which was for 1, which all these lower highs got maintained, right? Because keep in mind, the reason why I took the one down here was because on the lower time frame we broke, but then watch this. When I go up to the higher time frame, we never had no maintenance. The higher time frame never maintained this move. We just consolidated and respected lower highs and just dropped. We didn't have no maintenance there. Versus down here, we had consistent support, but then I could see buyers momentum. And then on the lower time frames, I could see the transitions also clear. I could see right here where we transitioned and broke this minor one and went back up and how we came. So the difference between that and that move and this move is that this move had more confluence versus this move. When I went down to the lower time frame, even up here, I'll show you. We didn't like, we broke, of course. I'll show you, like right here, for example, like we broke or whatever the case may be. But unless you're gunning for 30 pips, but every time we broke a defined area or bias took over, keep in mind the previous lower high was condensing it, keeping it tighter and tighter and tighter. So versus down here, we had a little bit more volatility because the momentum was cooking. The momentum was coming back. It did get tighter and tighter and tighter, but the higher, the low points are moving higher with it. Does that make sense? So even though they were going lower, these down here are moving higher. Does that make sense?
It was almost
Versus
like a
over
symmetrical
here,
triangle.
huh?
It was like a symmetrical triangle.
Exactly. Keep in mind, these were always the base, but after a period, it kept on pushing a little bit lower, a little bit lower, a little bit lower. So that little bit lower resulted in it stopping out. Versus over here, you had more buyer support, not only here, but in the candles itself at a defined area. So that was the difference. Did I answer your question?
Yeah, fantastic.
Hey,
All
Drew,
right.
what you say?
Hey, yo, Drew.
Hold on. Enrique was first. I promise Ricky you can go after, okay?
What you say? Swap zone is a strong zone to break.
Repeat that one more time, Enrique. I didn't hear you.
Is a swap zone a hard zone to break? Meaning when supply becomes demand or demand becomes supply.
So it is a hard zone to break, but it all depends on what perspective of a time frame you're looking at it on. Obviously, the lower time frames are gonna maintain more, but again, it all falls back to the higher the time frame, the stronger the data, the lower the time frame, the more details you're gonna see. So on a time frame like this, especially that I'm on, right?
Yeah.
Obviously, this bigger zone was the cushion, and we found support in the middle of the zone, right? But then if I go down to like the lower time frame, we broke this and we should be coming back to retest this. Should be. But then if I go down lower, we also have these same focal points that we broke as well. So obviously there's a fib to be drawn on a certain time frame to kind of predict and contradict the next move. The biggest thing is if you're going to use zones, use fibs and use QPs to kind of validate that. And also add a taste of patience to wait before you take it. So that way you get the candlestick pattern that you need to see to be confident to take it without no worries.
All right.
All right, Ricky, I promised you were next. Go ahead.
Yeah, I have 3 questions. Is that okay?
That's fine. Shit. These 3 questions could change everybody's life. Go ahead.
All right, so first question. So I'm like 5 months in with Q Banks.
Oh,
and,
shit. Good shit.
And I'm already like 80% done with the webinars. And I get a little confused. Like each time I watch the webinars, I'm like, fuck. Because I put in like 5 to 6 hours every day because I have the time. But then the back testing like comes into my mind, like, how can I like back test when I'm like putting more hours into the course?
So
when like, because I got other things to do, you know, but I also like just take a lot of notes, you know.
and we're actually Ricky, this is a very amazing question. We're actually going to touch base on that, right? Like, watch this. The thing is with Q has evolved as a trader tremendously. You have to remember, Q set the foundational piece for a lot of traders. You have to remember, when Q started to how he trades now is different. And he has this whole sequence of the webinars explaining that. So ideally, you do want to watch it from start to end, but also you want to watch the phases first, and then you want to watch from the most recent webinar all the way down to the beginning webinar. You want to watch them downwards. Does that make sense, Ricky? I feel like
well, I feel like my level is where he's at because 2 days ago I only trade on UJ now.
Oh,
and
good shit.
I do
was in a buy.
No, I was doing sales 2 days ago. So I feel like because I started with odd USD. Yeah, you see all that down. I
Oh,
caught all of
I
that.
forgot I got the Japanese at the end. Yeah, I dropped two. This is the last time I looked at UJ when it was over here.
Okay. Yeah, so I started with odd USD because I wanted to go his route, and then I felt like it was a slower pair because I was growing a lot faster. So I went to UJ, and I made I was a down draw of 800 pips, but over on my bias, news, my trend lines, my fibs, my exhaustions, I'm like, you know what? I'm gonna hold this shit for the night. Next day I woke up 2,600 in profit.
Oh wow, good shit.
Yeah.
So are you more so having an issue of consistency as far as for being consistent like that?
Yeah, my consistency is very good. But I like to analyze and then study, go through the course more than trading. But when I do catch a quality trade, I take it.
Okay, so I'm just trying to make sure I answer your question accordingly because you're saying
whether if I should back test, how could I do that? If I'm putting my all into that.
I feel like where you're at now, you have some type of consistency in the market, right? You know what a good quality setup is when you take it and what the reward feels like. I feel like now you need to log your trades into a MyFX books and gauge the entry accuracy and then work on finding more of those foundational pieces through backtesting, right? What I mean, going over previous market conditions, because UJ does a lot of bullshit too. So you got to be able to weed out the bullshit and find the diamonds in the move, right? And once you weed out the bullshit and find the diamonds in the move, you'll be able to use that same backtesting process to help you establish on when you're trading in the live markets. So I feel like that's the number one thing you want to do is backtest and then do that so that way you can get through it. But I feel like where you are now, if you have some type of consistency, you could watch the videos, but they're going to repeat themselves. They're going to intrigue you. They're going to entice you. It's more content, right? To become more confident. But what's going to help you keep that confidence is you applying it on the charts one-on-one with yourself, saying, yes, I understand why I did this. No, I understand why this happened. And once you have that understanding, can't nobody tell you shit about UJ. You get what I'm saying? If UJ dropped 300 pips, I should be like, yo, Ricky, what the fuck happened? Oh, yo, Drew, that was news, dog. Don't worry about that shit. We back tomorrow. You know what I'm saying? You should be the beast at your pair. So back testing that pair is what's going to fill in that gap and make you even better.
All right. And second question.
All right, go ahead. Guys, just so it's fair, just because Ricky has 3 questions, I'm going to pause your timer. I'm going to let Ricky ask his questions on the house. Go ahead.
So I use KOT and I do Cash App, and I don't know. I feel like when you guys do it, with more experience, you guys know how to do crypto, Bitcoin, and I'm just gonna ask you how do you withdraw and how do you deposit?
I mean, bro, I do everything via Coinbase or Kraken, to be honest. I do everything via Coinbase or Kraken. So what you do is you register for a Coinbase account. And when you register through Coinbase, they're going to give you a limit once you verify with the KYC, your documents. And it's as simple as the same way you do Cash App, where you send it to that Cash App BTC address. It's the same thing that you're going to do. You're going to find a BTC address. You're going to get it from Coinbase and put it on KOT, and then it's going to send it and vice versa. It's a very simple and robust process, but Coinbase is definitely going to be the key for those bigger income. Great question, by the way.
And then last question. When
go ahead.
So what I saw this in the comments as well. About I want to ask you about creating a LLC, and also when you withdraw your profits. I think I saw a comment on QBanks where he keeps 70 and he keeps the 30% for taxes for when he does taxes. Is that
so? That's a great question. So all your profits, when you file it, when you don't have an LLC and you file it, it's listed as capital gains. When it's capital gains, obviously you're taxed to a certain percentage. Now you're supposed to get an accountant. What you're supposed to do is you're supposed to start an LLC, right? And then once you start that LLC, you're supposed to get an accountant so that way the income that you make from trading, your accountant can keep track of it. You're not supposed to spend it immediately. You're supposed to let it build up in your bank account. And then your accountant is supposed to direct you as far as well, this is where you are year to date, so this is how much you're gonna have to pay for taxes. And it's an ongoing thing, the more income you make. Now, my experience based on my accountant has been thus far, the more money you make, obviously, the more you have to pay on taxes, right? There's deductibles, there's a whole bunch of things that you can do, but if you do more deductibles, you take away from your net worth and you're not gonna be able to get the things like the houses or the cars or everything like that. So my biggest thing is the money that you trade, save it. Save that money because it's gonna save you. And what you do when you save that money, cash out on occasions, cash out on your birthday, cash out on holiday. Every day doesn't have to be Christmas, but you're focused on, you either save the money or you invest it to make more money for you. So that way, as it makes more money, that money that's making more money can pay off the taxes with one investment. And then you get what I'm saying? So with your accountant, you and your accountant are going to be a team. And your accountant is supposed to let you know what's write-offable from your business and everything like that, because it's those things that you're going to do to use to deduct your taxes. But having an accountant goes a long way, because it's not just so, I can't just tell you like, hey, it's not just one thing. It's a series of things once you have a business. Every detail that's looked up. Once you have that accountant is there to keep up with that every bit of detail. A transaction that you make or anything that you make when it comes to trading, because obviously you're trading income, you're going to put that into your business to fuel whatever business you're going to do. So the main gist of that is that you want to make sure that you have an accountant. It's super important to find an accountant.
Thank you, that helped.
Anytime.
Appreciate
Yo,
it.
what up, Drew?
Yeah, Drew.
Oh, my fault. Go ahead, bro.
Hold on, my bad. I'm trying to see. I got the spotlight on me. Hold on, let me take it off. All right, talk to me. Who's talking?
That's me, Jaden.
Jaden, what's going on, bro?
Yo, what up?
Talk to me, bro. I see you
just
stayed
gotta-
up throughout this whole thing, man. I appreciate you.
Oh no, yeah, no problem, bro. You know, I'm staying with it. But I got one quick question regarding the quarter price. So like, how are you precise with that? Like, I noticed you keep jotting those down. So like,
Okay.
what makes you precise with that? You use like a line graph or something? Like, so what do you use?
What with QPs?
Yeah, like how are you so precise with stuff? Like, so.
What I do is I right click on it. I'll show you real quick.
Okay.
It's a great question, by the way. No questions are dumb questions, ladies and gentlemen. Damn, did I click all my charts? Oh, this is UJ. My bad. I got scared for a second. I was like, where all my shit go? So let's just say I'm trying to drop a QP. Obviously, we know we use the horizontal line to do so. Let's just say I plot it, any, mini, money, mo, drop it anywhere, right? Right. What I do is I right click on it and I go to settings and I go to coordinates and I type it in. It's usually the last couple of digits, and then boom, I type it in, and then boom, it goes there.
Okay. So like right now when you're determining the QP, like say for instance, obviously you'll zoom in or zoom out. You like know what time frame you specifically like jot these like QPs on?
You can drop them on any time frame. QPs are support and resistance. Watch this. I go to the daily. You see that little QP right there, how it's being used as support? It doesn't matter the time frame. It just matters if it's being used or resistance. And then from there, you base your entry off of it off the lower time frame. That right there is a gem. Higher time frame support, lower time frame entry.
Okay.
Higher time frame resistance, lower time frame entry. Vice versa.
Okay. All right, man. Appreciate you, bro.
And the last thing, you want to enter as close as possible to these QPs, because that's what's going to make your risk score reward even better. You see when I told you that this entry right here was sloppy? I had the opportunity on a 1 minute to enter like right here. I let it build up and I ended up entering right here when it broke this because I wanted to be safe, but I could have entered down here from the tested candle. I could have entered at this candle. Didn't. That's what I normally do, but I had to make sure it made sense.
Regardless, the QP is just the area you're watching in general. You know, it's not always as perfect when you're trading off the QPs, what you're saying.
Exactly. But if you watch it and you gauge it, you should be good.
Okay.
All right, next question.
Drew, I got an easy one.
Yeah,
question?
Who's this? Is this Shane?
Drew, FX, right?
All right, talk to me.
Yeah, good night. Good night, everyone. My name is Shane. I'm from Jamaica. And my question for you tonight is that I think, are you hearing me?
Yeah, I can hear you. Somebody's talking, but they're gonna pay you respect. Go ahead.
Okay, yeah. So this one question, I think it's gonna help clear it up because we both trade the same pairs. I'm not familiar with the lot size, to be honest. Like, say for example, like today, I was actually trading GJ and I just used a random lot size and I made $433. I'm excited that I made the profit, but I'm not so excited because on the other hand, I'm not so excited because I'm like, damn, I don't really understand how many, what amount of the account I just risked a while ago to gain amount of this. And I don't want to be able to move forward and not understanding the percentage that I'm actually risking on the account. Because when I'm able to have a $1,000 account, it's the same thing I'm gonna do and I might just do it. So I just really want the understanding of the lot size and like how to familiarize with them because I'm not so sure. Today,
Okay, I got you. That's a great question because I'm not gonna lie. I get that question a fucking lot on like how I know what lot size to use for what.
Yeah.
I base it up on what I want to risk, right? So everybody starts an account with something, whether it's 100K, whether it's 200K, whether it's $100, whether it's $1,000, and you got to do the math on what you want to risk out of that percentage, right? So for example, 10%, I'll start with 1,000 because that's the easiest one to kind of do math that everybody should know. $1,000, if you risk 10% out of that, that's $100, right? Now, $100, what do you have to ask yourself now? That's at 10%. I don't want to risk 10% per a trade because that gives me 10 tries. So now out of that $100, you really only want to risk 2 to 3% out of that, which is a 0.30 or 0.20. But you have to do the math. So now let's do the same on like a 100K account. A 100K account, 10 lots, right? 10 lots is only 10 lots every 10 pips is only 1K. That means that I'd have to take a shitload of things to blow that fucking account. Right? But then if you're doing it on a prop firm, 5K is the new limit. So it all depends if it's prop firm or if it's your money. That's your timer, but I'm going to continue going. If it's prop firm, I would recommend using a calculator to calculate your lots because every pair has a different amount of spread, right? Like US 30 has a different type of spread. Gold has a different type of spread. Everything has a different type of spread. And the only reason why I say that is because instantly when you take a trade, if the spread is high or low, you're either going to be in negative or in positive. And if you're in negative, you got to get used to seeing that negative. So for example, you said we trade the same pair, which is GJ.
Right.
I would say GJ's spread on the broker that I trade on is Athens. And Athens spread is normally like 3 to 5, but then when it gets a little busy, sometimes it goes up to 10. And that little number that you get on spread when you're looking at it on MT4 on the phone, you add that number to wherever GJ is at, and that's where the entry is going to put you. So sometimes spread be a little high. Like for example, price when it was at the 750, spread put me at that entry when I took it off that candle. I wasn't mad at it, but you have to add spread into it. The whole point of it is you want to do the math as far as for lot size goes, but there's lot size calculators. There's a bunch of things that you can utilize to get that beautiful result. You don't have to beat your brain up.
Okay. Like for example, there's one more question. Like, what if
you could,
for
bro?
Example,
You could.
I mostly use like build account from like $50 and up. But today was my biggest day ever. Today was my biggest day ever. But I really wanted to get this straightened, and I heard that we're gonna have a live today, and I actually follow your page to actually ask you this question. Like how much would you actually risk on a $50 account?
On a $50 account? That's a good fucking question. I would risk I would risk 2 cents.
2 cents? Okay.
I would risk 2 cents because every 10 pips at 2 cents should be no, because let me see. Yeah, let me see. Because every
That's
10
the issue. That's
pips,
the issue. I'm really
every
happy.
10
I'm not
pips, every
about to
10 pips,
purposely-
damn, I haven't did that shit in so long. Every 10 pips
$2.
on a penny is $1. And if
Right.
I get $100, that means I caught 100 pips. So every 10 pips on 2 cents should be $2. And if I catch if I make $6, I caught 30 pips. So yeah, you just got to do the conversion on the actual percentage, what that is in dollars. But like I said, in order to kind of figure that out, they have calculators that can do that. You don't have to bust your brain and try to figure it out. Like that's like some 90s shit. We're in like 2023. So you don't got to do that no more.
All right. Thank you, man. And appreciate it.
All right, got you. Guys, this last 10 minutes, I'm going to
You're a
ask you
dream,
to
you're a
have
goat,
this.
bro.
Hold on, before you guys ask any question. These last 10 minutes, let me have them. I want to share this life-changing story, this life-changing experience that we're all about to go through together. So I need y'all all to come up on camera. I've been working on this since fucking October. I'm not even nowhere near goddamn done, but this is only exclusive for y'all, so I want y'all to see it. This is my plan, right? I've been trading for 8 to 9 years. So as promised, this is the project that I've been working on. This is the next evolution of becoming a profitable trader. I don't know if it's going to be a boot camp. I don't know if it's going to be a 5-day course, but this is it, right? So what I realized, right, in my 8 to 9 years of trading is that, in my 3 to 4 years of teaching, is that most traders, they suffer from the same mistakes over and over and over, whether it's psychology, whether it's lack of confidence, whether it's trading, whether it's skills. In my beginning days of trading, I suffered from the same shit that y'all did. The only thing that I did that was different was I studied and I applied myself, right? But I applied myself to a course that worked, but I still have to make the course my own. Sophia, I see y'all guys in here. What's up? Hey. It's the first time coming to my house. I'm playing. Anyways, in that years of experience, right? I had to learn on what the market taught me. Like I had to learn, don't trade on NFP, but I'm hard-headed, right? I'm a Taurus. So you could tell me something, I'm gonna be like, fuck you, I'm gonna do it myself. That's just my personality. I have to suffer to learn. I'm okay with that, right? But in the years of going through things, I saw that there was a lot of courses, right? And despite all those courses in my come up, right? There was one course that made it or break it for me, which is obviously Q's course, right? But now in my 3 to 4 years of actually teaching, I've noticed that people have a bunch of courses, but it's still the same shit. I still get Raul students, or I still get Q students, or I still get Alex's students. I get everybody's students, and everybody's having a hard time coming over that edge. So it's just like, if everybody has a course, why doesn't it work? Now, look at all the great institutions that we have in the world, for example, that come up with a course. Yale, Harvard, Columbia, major Ivy Leagues, right? They have a 90% success rate. When I studied it, when I talked to people that went to these schools, you know why they have a 90% success rate? That's because of their curriculum, their infrastructure. Their infrastructure is so fucking on point that it touches from A to Z the right way. But not only that, the exclusivity of the product. Think about it. If you're on a certain level and you meet that criteria to get into that school, being into that top 4%, you're going to be around other 4%ers. You're going to be around other winners that are just like you. You're going to be around the best of the best, because only the best of the best get accepted to schools like that. So you know what I noticed in my study? They have a high success rate because one helps build another. Think about it. Think about being in a room full of Qs. Think about being in a room full of Rahuls. Think about being in a room full of things. You're all like-minded. So if you don't know something, their goal is to help you think through their perspective. Not only that, but the curriculum, right? So when you think about that, you think about the coaches, you think about the people that are teaching them. It's up to the educator to follow through. There should be no reason why I should be getting other people's students if they're following through with the curriculum. Does that make sense? If they're following through with the, I want to say, with the material, and making sure that everyone's consistent, then they should fall through. But that's why these big Ivy leagues, that's why these big schools have a high success rate, right? Now, when you look at the average course completion is 30%. The average success rate from that course is 10%. For example, look at anybody who's took somebody's course. 1,000 people will purchase it. Only 10% will succeed and come out on top. You know why? That's because there's good apples mixed with the rotten apples. That's because there's 3%, there's 10% mixed with 4%. And some people are catching on to curriculum quicker, but not. It's not a bad thing, but structure needs to be upheld in order to have a high completion rate. So I want to change that. And the reason why I want to change that is because I do it in my live sessions every day, where I pique people's interest, where we're able to get it. But not only that, I have a course that I want to revamp and I want to make even better. And that's going to be the Pack University revamped, right? With that Pack University revamp, I'm putting in a lot of effort. I'm making sure that I fly out to these schools, that I sit in, that I take in on what real professors do, what real lecturers do, but it's not nothing that I'm rushing. So if y'all guys want to be a part of the next biggest thing that is going to change your life, y'all could join my wait list, right? But at the same time, make sure you ask yourself, are you ready to be in that 4%? Are you ready to commit yourself? Are you ready to push through and get that breakthrough? Because you don't want to cheat yourself. The course is only going to bring you so far. You have to apply what you learn in order to be successful. So with that being said, if you think you're ready, join the wait list, and you'll see what's to come in the future. I want to thank you guys so much for having me. I want to thank you so much for blessing me with your presence. I'm going to end this out with a prayer because I want y'all all to be safe before y'all leave, before y'all go back to your lives, because I keep God first throughout everything I do. So I'm going to pray. Dear God, I hope that you guide each and everybody here. Thank you so much for that, allowing me to share my experiences and my mindset with the audience. I appreciate them, and I appreciate them for becoming friends, becoming family, becoming something bigger than ourselves, dear Lord. I ask that you guide them on this wonderful Friday night, and that you protect them, and that you give them the inspiration, the drive, the dedication, but also the knowledge that they need to be successful in 2023. I know you won't fail them, dear Lord, as long as they don't fail themselves. I know you will help them as long as they help themselves. And I know you will push them as long as they push themselves, dear Lord. Their time is now, dear Lord, and I ask that you push them, that you fold them, that you mold them into the next successful thing. And in Jesus' name we pray. Amen. Good night, everybody. I appreciate y'all. Thank y'all so much. Deuces and later.